Let's talk about day trading. Day trading is often more challenging than swing trading or position trading because you are attempting to capture a smaller price swing in the market, making you more vulnerable to transaction costs. In addition, I found that most technical indicators like the RSI or the MACD perform poorly, possibly because of the lag they contain. I found that most successful day trading strategies make use of price action or chart patterns like the bull and bear flags. But nonetheless, let's make our lives difficult and use StrategyQuant to create a day trading forex strategy. This time, I will use the default template, so all conditions will be randomly generated. The choice of market is important here. I found that StrategyQuant's genetic algorithm heavily favors breakout or trend following strategies. Since we are day trading here, we have a limited amount of time for trades to develop, so we have to pick a market that trends well. And for me, that's the pound yen. I will set the daily exit to be at 23:45 hours since we are trading on the M15 timeframe. And here is what the builder came up with. This is basically a trend reversal strategy that uses the Williams percent range and the Keltner channels, which are the less famous cousins of the stochastic and the Bollinger Bands, respectively. The Williams percent range is largely a carbon copy of the stochastic and compares the closing price to the high-low range over the past 20 periods. It oscillates between 0 and -100, where levels above -20 are considered overbought and levels below -80 are considered oversold. The middle band of the Keltner channel is the 25-period SMA of typical prices, while the upper and the lower bands are placed 2.5 times the average high-low range over the same 25 periods, above and below the middle band. So, for longs, you wait for an oversold condition as indicated by the Williams percent range crossing above -80 and an open below the lower Keltner channel, after which you place a buy stop at the highest close over the last 20 periods, valid for 5 bars. Downside is protected with an 80 pip stop loss, while profitable trades are closed either by the daily 23:45 exit or this 48 bar time stop, which translates to about 12 hours. For this trade here, the time stop was activated. For shorts, you want an open above the upper Keltner channel, which just barely happened here, and the Williams percent range has to cross below -20. We rode the intraday downtrend until the 23:45 exit. From 2015 to 2024, the strategy traded on average about 3.5 times a month and was in the market only 9 hours per trade. This probably means its correlations with other strategies are very low and would therefore be a good addition to a portfolio. There was an 800+ day stagnation between 2020 and 2021, resulting in 2020 being a losing year, and that's why you should always diversify. Personally, I am most comfortable swing trading on Forex, with my trades lasting anywhere between 2 to 3 days on average. I usually get better risk-adjusted returns when swing trading, and I don't have to be overly concerned with transaction costs. The downside is that I am more exposed to bad economic reports as well as geopolitical risk. Of course, everyone is different, and a large part about trading is finding out what works best for yourself. So, if you are into Bitcoin instead, check out the video at the top, or if you are into the DAX, try the video at the bottom.